Today we're discussing the tragedy of what is AMD after looking at its earnings. Is it a buy, right? Is it undervalued? That's the major question here. You look at other names and other stocks like Nvidia, which I mean, all things considered, are still holding up. Great close to end the week. Signs of a buying stepping back into play. Broadcom, these other names still look really good, but obviously look at AMD, and the question is this a buying opportunity? That's the number one thing I'm seeing out there right now. And I don't think it is. I'm going to explain exactly why, and I'm going to explain why these other names have more reason to actually bounce and see the buying step in. Now, number one, the first thing we step into is earnings. And this is the biggest thing you have to watch, right? If you look at what's happened over just the past year, you don't have to go past 2 years. Let's just look at the past year, okay? So let's go to, March 2024, last 4 earnings, okay? Revenue, $5.4 billion. That in itself is grotesque. One of the worst things I've ever seen, okay? For instance, going back into 2022, let's go to 2021 before we had the big, pullback on stocks overall. So we'll go to the end, mid to end of 2022, 3.85 billion, end of 2021, 4.3, beginning of 2022, like peak action, 4.83. Okay. All right. Fair, right? Some growth there, but this wasn't the AI boom. This wasn't the chip boom. And you can see, 2024, March, 5.4 billion. Next quarter, 5.7, 6.7, and then 7.53. 7.53, probably closest to the highest we've ever seen here on AMD. Now, the reason you have to go into this with the mindset of, okay, is it undervalued in comparison to these other competitors? The numbers you're putting up now aren't really that much better than what you were putting up back here, 2021, 2022, considering what's happened in the space, right? There's been an overall boom in the sector, okay? Now, the next step you want to take here is going and looking at what's happening with the PE ratio. We're not even comparing it to the other earnings just yet, right? The PE ratio here. Now, in 2022, your PE ratio was a 44. Okay, decent opportunity as far as a buy. You could possibly convince me this is an opportunity. Even going into 2022, when the market was at its lowest point, we're not going to talk about Nvidia and these other names yet, but their PE ratios were very low. And then you see 2023, September 2023, your PE ratio literally hit an 856. But for some reason, no one wanted to talk about AMD being overvalued. The question was, is Nvidia, isn't it overvalued? Isn't AVGO, these other names that have run so much? But the fact is, AMD, this whole time, even now, has a PE ratio of 106. Not a good look. Now, the other part of this you have to look at is, well, what is NVIDIA's PE ratio? NVIDIA's PE ratio is currently a 50, and it has been a 50 since essentially October 2023. Now, did it get higher for a little bit to 150? Yes. But the point here that's very interesting is you are actually becoming a cheaper stock every earnings. NVIDIA has become more and more affordable. Why? Because your revenue is growing so fast. And it's still growing. There's not really a sign of a slowdown. Your margins are 74, 75%. They're incredible. Going back, 2022, what was your earnings? 7.1 billion. 2021, 5.6 billion, right? Like $1.5 billion more than AMD's at the time. Crazy to think about. It was only making about 25% more money than AMD back in 2021. And then you look now at their most recent earnings, they're doing 35 billion. Quarter before, 30 billion. Quarter before, 26 billion. Quarter before, 22 billion. Growth on growth on growth on growth. And that's what should happen if you're in a sector that is on fire and that's just catching rapid growth. Because the problem is when you're in a sector that every stock is growing rapidly and your stock is not growing rapidly and it's actually growing far slower than all the other top names, that's an issue. When you're going at the same speed in which you were growing back in just a normal 2021 type market, that's an issue. So again, those are things you have to be looking at right now. And when I look at AMD, I just don't see those signs just yet. Now, again, you are getting back to like it's still, like, I can't even say you're getting back to where you were, because nothing has really changed since 2022, 2021, which is crazy to say out loud, right? The stock is still just not proving its worth, right? So when I look at AMD, it's hard for me to say from a technical point of view that this is not potentially an opportunity at like 99 to 100. And I would be a fool to say you're not trying to catch a knife near this level. But the risk reward is interesting, because if you come down to $100 and $97, your stop loss is pretty tight, makes sense. Stops below around, $92, $93, and you're aiming just really back into 112, maybe 115. To really get bullish, you have to really get back above those major points, like your 200 SMA, which is so big that we're talking about AMD and it has all this hype, and everyone's like, is that a buy? Do we, should I be loading the boat on this? Is this the next NVIDIA? But you look at NVIDIA, and this is becoming a hype video for NVIDIA, right? NVIDIA is sitting at its 200 SMA, which AMD could fail to hold like 6 months ago, right? NVIDIA came back to its 200 SMA for the first time since January 2023. But again, the question is, should I buy AMD? Yet NVIDIA beats earnings every quarter. They grow 15 to 16% quarter after quarter on their revenue. Their margins remain top tier, best in the game, quarter after quarter. So I encourage you, when you're asking yourself about a stock, is it a buying opportunity? The sector is very hot. Is the stock just lagging? You have to look at the actual earnings statement and the earnings numbers of what's going on with that company. Now, a little bit off subject, but I'll show another hype name that's out there that everyone's talking about. It's Palantir. And this is one of those stories of the music is playing awesome. It's not slowing down. It hasn't even appeared to get quiet. Palantir has gone on one of the greatest runs that we've seen in a while. And I will say, I wasn't really a fan and I wasn't buying Palantir. But when you ask me my opinion on it, it makes some logical sense here. Why? Now, its PE ratio, I will say, is extremely, extremely overvalued. And something that I could compare this name to, which is a total different sector, is something like Celsius. And I'll explain here in a second. And this is more of the concerns of what you should look for and something that's getting a lot of hype and a lot of momentum. I think Palantir right now deserves to be going up solely based off of one key metric, overall growth. When you look at earnings, they justify this. 2023 of November, you did 560, 600. May 2024, 630, 678. This is when things started to heat up around the 678 level going into August of this past year. Because not only were we getting the AI hype, but things were like leading over, and Palantir was really building its base. And Palantir, they're having the same problem that NVIDIA is having, is they have a lot of demand for their product. They just can't supply it yet. And so their sales are really beating. So they went from, again, 634 to 678, and then now they just did 725, and then this most recently, 827. You started to see the snowball started to grow rapidly. And so their earnings are just rapidly dumping in. And so what investors are doing here, again, and you're seeing this across the board in a lot of names that are doing this. I would say NVIDIA is the most closely valued in comparison when you look at PE ratios. And this also goes and say that you don't necessarily have to have a great PE ratio to be a good buy, as long as your earnings are justifying some sort of growth. Because as an investor, you're looking at, well, what's going to be the value, next quarter, the quarter after? Can you maintain what you're doing? And so far, Palantir over the past year has maintained excellent growth. But what's going to happen when growth slows down? If it slows down, that's the $1 million question. And that's the problem with Palantir that I don't think people want to talk about. So again, Celsius is a total different sector. It's, again, nothing to do with AI. It's like a drink company. But the reason why Celsius was so hot was not because it was a great company. That's not why. The reason why it was so hot is because look at its earnings: 259, 325, 384, 350. Then this is where things really slow down right here, right? But I think they anticipated a slowdown in earnings, and then you peaked here around like 355 again. But you see right there, your estimate, continued growth. I remember this meeting like it was yesterday, right? They were like, oh, well, we're going to slow down. That's why their estimate was so low, but then they beat. And then they came out the same thing, like, okay, well, we should come in a little bit higher, and then they missed by 40 million. So when your company is thriving or the stock is thriving off of great growth and then growth slows down, what holds you up? Now, I will say Celsius is in a shit sector compared to something like Palantir, which AI and all that is doing very well. And this is going to be the future of tech in itself. So I do think Palantir has a much better runway. And I think long term they'll do better. But again, these are things you have to look for. And when you look at AMD, this is why AMD could never keep it up. AMD had a good run, all things considered. You broke your 2021 highs, but it never got the steam that AVGO, Broadcom, LRCX, NVIDIA, right? It never got that type of run because its earnings never showed that type of acceleration. So the trend was hot, but then it died out. It didn't matter that they were having partnerships with Microsoft and everybody else if the earnings don't justify it. So there's two ways you have to look at that, and that's really what we just talked about right here. So as I look at AMD, if I'm buying it, I'm not buying with the mentality of we're going to go to all-time highs. As of right now, if I'm buying it, it's just a technical buy at around $98, $99 to $97 with, again, like $5 stops on the downside. It just logically makes sense. You start to break that, you start coming down to $75, and then you're in a whirlwind of pain. And yeah, so that's my opinion there. If you have questions, comment down below. Love to answer your questions. Have a good one, traders.